Hello, guys. My name is Kevin Martin, as you can tell, and I'm a sophomore at Sam Houston State University. I'm a business administration major in banking and finance, and I wasn't always on that road to my life. When I was in high school, I started off wanting to be a acting guy. Because I really liked acting. I thought I wanted to do that my whole life. Act, be like Will Smith, Denzel Washington, all the cool people. It seemed a lot of fun. I used to like sit at home and watch like what the Fresh Prince of Bel Air, and I'd see like Will Smith, and they'll show like the outtakes, and like they'll show like Will Smith and like Carlton like goofing off, and I thought, hey, that's pretty fun. It seems like a pretty laid back job, and they get paid like a bunch, like a lot. But once you comes in term with that, like not everybody gets to that level of famous. So I was like, okay, I don't want to be like looking for job to job, not making decent amount of money. I wanted to like live like on a paycheck, if I live with a family. So I was just sitting in school wondering what I should do in my life, and I asked my mom, and she's like, she graduated as a business major from University of Phoenix. So I was like, huh. So I started looking up some business administration stuff, and and something that really caught my attention was banking, because everybody loves money, and who doesn't love money? But I do. But many people kind of see banks as a place where you save money or you get a checking account or where you get loans and stuff. But that's not really the big picture of how a bank functions. Like, remember, a bank is a business like any other business. It strives to make as much money as possible. They make money simply by, moving money around. Like you move money from one bank to another, and keep that in mind as they move through the service that a bank provides. And the first service that most people become familiar with banking is savings account. At first, a savings account is a situation in which you give a bank your money for a certain period of time, and withdraw whenever you need it, or and it earns it accumulates into like smaller. It gives you like basically more money the longer you put it in there. So let's say if I put like I don't know $1,000, and the increased percentage is like 0.7, so I will get like so if I keep it up there, it will keep adding more money. So kind of like a penny a day or 7 cents a day in that term. So it's a good idea to have it's a pretty good idea to have a savings account. But what actually happens though is that a savings account is actually a kind of loan, but like it's not like a real loan. It's like a lender loan. It's not really different than any other loan, except it's like really flexible. You can pretty much give them as much money as you want to the bank and get the loan paid back whenever you like. And another thing that's in banking, I'm pretty sure everybody heard about it, is also a checking account. A checking account at most banks is no different than a savings account. You're lending the bank your money, but with a checking account, they pay your interest with services like dealing with checks you write, or you go to a gas station, you swipe your card, and pump gas. You got to pay that back. But instead, this has interest. And the other major aspect that people think when they consider a bank is loans. They lend money to people for cars, houses, and other stuff. So the question is, how do banks make money? Well, for one thing, they take the money you loan them and earn a pretty strong return with it. Then they give you a part of that in return form of interest. So each dollar you put into your account with the bank makes them a little bit more money. Okay. For example, so let's say for an example that the bank has a saving account with a 1.5 rate, of a return of interest, whatever, which is probably better than any bank in like the whole entire world. But it's just an example, so just take it. So they take the money from your account and a lot of other savings account and use all this money to buy for, like, for example, a treasury note, which is guaranteed by the federal government, returns by about 5%. Okay, no, let's do a better example. Let's say that someone else comes into the bank and wants to borrow some money for a car. Okay, the bank offers to lend them the car at a 7% return so they can take the money from the account at the bank and give it to the borrower. Then the borrower pays back the money plus the interest, which the person passes on to 1.5% to you, keeping 5.5% for themselves. So, kind of, let's say a bank opens for a business and two people open savings account at 1.5% with 10,000 each. Then, let's say, I don't know, Susie comes in and wants to borrow 20,000 for a car loan for 1 year. So the bank uses the $20,000 that people have deposited at the end of the year. Let's say Susie will pay back 20,000 plus 7%, which is what's 20,000 plus 7% of 1 year. Give or take 1,400 pretty much. Yeah, 1,400. Yeah, that's about right. It's 1,400, 1,600, one of those. Okay, then each of the 7 account holders come in and clean out their accounts. So each one takes out 10,000 plus the 1.5%, 150, for a total of 20,300 for the most part. The bank then keeps the remaining 1,010. So if that happens, say 100 times in a year, 200 saving accounts, 100 car borrowers, the bank makes how much is that? 110,000 a year. When you start figuring long-term things like home loans, and also when people buy things like certificate of deposits, it becomes clear that a bank can bring in a lot of money each year. So now you see why I decided to become a banking major. It's not. It's somewhere to start at. Like, also if I don't like it, I can always change majors. But I think you should give it a try, especially if you love money like I do. But yeah, so give banking a try, and I guess I'm done here. Nice meeting you guys.